Hello everybody. So it is Sunday, Sunday afternoon, the 29th of March, 2020, and of course, markets are swinging wildly. Coronavirus is running rampant. We're out of toilet paper. Everybody's suffering from cabin fever. It's interesting times indeed. So, and this is displayed very much in the chart. So that I want to highlight a couple of things here looking at dollar index. All right. So first of all, we had a nice trend structure, relatively normal sized candles. The candles got bigger. We had a bigger run during the first early kind of going into early February as the coronavirus starting to rise. Then we've had a bigger swing in the other direction. So the analogy I would use here is kind of a car that it's got a trailer attached to it, and it's kind of maybe on a slippery road or on ice, and it started to careen out of control. So it's overcorrecting and it's kind of swinging wildly in both directions or multiple directions. Eventually it will calm down. For the moment, it is just swinging wildly, and if anything, this is displayed in this very much oversized monthly candle, which is now in decision. We are at the end of the month on Monday or Tuesday, so therefore this is likely to close this way. So last week I was incredibly bullish because of the scale of that bullish candle. It's just given all of that back, and it has actually been rejected from the 103 level, 104, which are historically significant, and prior to that, week before last, it was rejected off the 100. So as a result of that and a result of the price action here, I'm leaning actually towards the downside, but the fact of the matter remains that this is swinging wildly. So this coming week, I'll be looking to see the market actually head lower. So at some point, it will eventually settle into a routine. Likely this is also a behavior as a result of the 100 levels, historic levels here. Okay, so historic resistance. And therefore, if we do ultimately get a weaker US dollar off these levels, a few years from now, we'll look back and that will technically be the reason why, even though historically it might be as a result of other factors. So this week I'm going to revert back again to a potential weaker US dollar this coming week. But of course, yep, it is absolutely crazy. It's clear that the market is swinging in multiple directions. And all that really does is underline why we should be extra, or why I'm going to be extra cautious when it comes to trading. Actually, most of my trades, I had a couple of stop outs. I'll talk through those in a moment, and that was literally as a result of these market swings. But otherwise, it's a break-even week. So again, just look at the size of the candles historically and look at what they have been the last few weeks. Really, really big. So there's a lot of different things going on, and there's just general global uncertainty. But I'm going to lean again here towards, especially as the euro is kind of again towards these historical lows that we haven't been in a while, and therefore a rejection of those lows makes perfect sense as well. Cable. I was looking really here for, in the longer term, as I said originally, I was looking for this to go long because we haven't been below these lows. In fact, we breached lows in the last 2 weeks that we haven't seen since 1983. So it's very possible that that might form a bottom for cable, and therefore that we ultimately end up with a bullish candle and that we climb a lot higher. So when I look at cable against certainly GBP sterling against the US dollar, the idea for a weaker US dollar makes sense. Australian dollar, again, this was one I took a trade this week. I was looking for a break of the low of this bearish candle. This is a really nice downtrend, so that was losing trade, and markets climbed higher. So overall, it's a really, really nice trend, and it does imply a weaker Australian dollar. So what I really have to do this week is I need to, we're sitting with the US dollar basically as an indecision candle, and that will have an impact on this. And it has introduced uncertainty, whereas usually it is moving in one direction or another. QB dollar, same thing again, really nice bearish candle, triggered in, stopped out, a little bit annoying on that one, but it's fine. I mean, it is just that's going to happen during times of uncertainty. Will be an increased rate, increased number of losing trades, which are not bad trades in themselves, just an indication of the state of mind of the market, and that happens from time to time. So there we go. So again, this could end up finding a low here if we get that stronger rejection and then finding that the case. Really, the coming days, it's probably going to be worthwhile to update this again on Wednesday because of this just ridiculous swinging. Dollar yen is still within its range. It's been largely within a range for a few years, and that kind of seems to be the case so far, so no real change there. It doesn't really say anything other than the fact that it's still within that range. Then same thing with dollar Swissy. So dollar Swissy has a downtrend, but it is still very much within a range. Rejection of that level makes sense within this range. But at the same time, should this ultimately break out of that range and head lower, that makes sense. The Swissy has been kind of doing that in the last few months across some of the other currency pairs that it trades with. And then having a look here again at dollar CAD, you can see that really strong rejection, bang off the previous highs as well. It was a big move on the weekly, and a retracement coming back down, potentially back down into these key levels, and then finding some support there. So this might simply be a retracement here before that. And of course, dollar CAD doing its own thing at any rate. Then having a look at, so that will really be that's my kind of way. Again, I'm just very, very cautious of that, and of any news that comes out. We'll obviously have probably have non-farm payrolls coming out on Friday, and of course the jobs numbers have had a big impact. That's a big thing that's happened. So all of this uncertainty in the markets is creating these very wild swings, and so what I'll likely be doing is having a look at the crosses as well. So for example, some of the ones that I really like the look of earlier this week were the Aussie pairs that had set up to go short. That one hasn't stopped out yet. Aussie CAD was, I think, too big to enter. It was too big a candle. Aussie Swissy had set up. It hasn't stopped out yet, but it may follow that path of Aussie dollar. Aussie yen had also triggered in. So I'm still sitting in a couple of those trades and just seeing how that ultimately unfolds. And again, we had a couple of really nice bearish candles that have subsequently triggered. So that's just an indication. Market goes one way, then decides no, it wants to go the other way. And so I'm definitely going to be cautious this week. At some point, I know it's going to settle down. It's really just keeping an eye on that. And so I'll be reducing my risk. I'll probably still be trading, but I'll be more selective in the process, probably focusing on a few of the crosses and keeping an eye on this and see where we are Wednesday.